And good morning, good evening, good afternoon, happy Friday, students and traders and analysts. This is Mike, the FX boss, broadcasting you live on YouTube and other streaming platforms. Happy Friday! How is everybody? Yes, this is the professional Forex trading course 101. What is our goal? To go from zero to hero, right? To bring you from zero to a millionaire trader potentially in 3 years on average in an institutional way. What does this mean? As always, first the analyst, then the trader, right? And today we have what is your strategy part 3, everybody. Remember, if your way is not working, why don't you try mine? This is number 1. Number 2, risk disclaimer, this stream is not trading or investment advice. We are here to learn. All right, everybody, you know the text, it's always the same. All right, so what I want to talk today, it's about, talking about strategies. What I want to talk today, it's about risk management and trade management rules. Let me just delete a few of the things. Let me delete a few of the things. Delete. Alright, give it a second. Alright, we are done. So we're talking about how to form your strategy, everybody. And text. We are going to delete text. Right. It's unlock, edit label. So we're going to talk about risk management, risk management and trade management, risk management and the trade management rules. All right, risk management and trade management rules. Everybody, you need to choose. All right, you need to choose. All right, so let's talk about risk management rules. Hello Sam, how are you? So risk management rules, everybody, what does this mean? This means that if this is the Fibonacci and where is lock, unlock? Can I move it? There you go. All right. If this is the Fibonacci, you might choose to enter with different risk. All right, and if this is the market wave, you might considering enter with different risk at the different levels. Does this make sense? Sam, did you get my emails? Yeah, I'm sorry everybody, you know, Sam, it's not the only one, but 11, you know. This was back in time, it's for free. Now you need to have a Darwin X0 account to receive, in order to receive the free manual. Okay, it was free back in time, but then rules changed, so sorry about that. Okay, everybody. Yeah, I need to be fair to everybody. If I give it one for free, then I need to give it for free to everybody, and then the guys who open Darwin X0 are going to start to complain. Why did you give him for free? You know, we know how this goes, right? All right. So talking about risk management, this means that edit label. This means that you I don't like it. You know, this is the new features of Dukascope. I mean, text, you know, they're complicating. Done. All right. Now in here, and now I need to unlock, and now I need to edit label. Come on, edit label. There you go. So talking about risk management, you might consider to risk less. What happened? You might consider to risk less in, whoops, come on, risk less. Give me a second, everybody. Anchor, what does this anchor know? Risk less in extensions. All right, so you might, I'm going to leave it like this. This is no good. Anyway, we are getting through, don't worry, we are getting through. You might consider to risk less in extensions. So I'm going to, okay, new text, right click. Which one? The second one, edit label, and extension, and risk more in end of retracement, end of retracement. There you go. Here, and right click, or just click in here, click on this one. All right. You might consider to risk less in extension and risk more end of the retracement. So market wave, you know, and we've learned that the market wave is combined with short-term trends, right? Short-term trend. Okay, so here, come on, where is the right click, left click, come on, left click. There you go. Blue color, oh, all right, all good. So you might consider to risk, example, you might consider to risk, and give me a second, just an example, all right? You might consider to risk 1%. I need to unlock, and then I need to this is so frustrating. I need to edit label. There you go. So at the end of retracement, you might consider to risk 1%. Sam says, yeah, I got them, thanks for the reply. Click by apps in the text, it works better. Click by apps in the text. How can I do this? Apps. Oh, ABC. Sure. Alright, everybody, so risk management, talking about your strategy, you might consider to risk 1% down in here, and as the market progresses to the new extension, and let's say that you are entering up in here, you might consider risking. So right click, ABC label. You might consider risking 0.5%, just an example, up in here. Does this make sense, everybody? This is risk management. And the same goes as per the Fibonacci's. Let's say that you have a counter trend line break in here, and all right, but then the market went up, but then it went into a deeper retracement. Just an example. You might consider, can I clone 0.5%? Clone. This works well. You might consider risking 0.5% up in here, and you might consider risking 1% down in here. Does this make sense, everybody? There is no right or wrong. Why, boss? Why? Because the deeper the retracement, the higher the chance of the reversal. Yes, you are going to learn a different risk management strategies in the Fibonacci Mastery. Okay. The best thing about the Fibonacci Mastery is that risk-reward ratio, it's not going to be an issue anymore. But we are still in the Forex course 101. All right? Boss, can I risk the same? Yes, you can, but let's take, it's the same logic. Great question, by the way. Let's take a look at the Fibonacci. All right? If you risk 1% up in here and the market goes down to here, then you would not have a chance to risk 1% down in here, meaning you are going to make less money. Does this make sense to you? Sam says ABC, thank you very much. Everybody, can we understand this? Somebody's asking on the other streaming platform, not YouTube, that, oh, can I risk the same risk down in here? Give me a second. So can I risk 0.5% up in here or 0.5% down in here? Can I risk just the percentage that I'm risking and it's always the same? Can I do this? I said, yes, you can, but look what happens if you risk 1% in here, you know. Oh, but I can enter another 1% in here. You are increasing the risk. Okay? You must define your risk per trade. Example, if your strategy says that you are going to risk 1% per trade and you are entering 1% up in here, then you can't, or you should not enter another 1% up in here. I mean down in here. So Fibonacci wins 7 times out of 10. You are still going to win, alright? But you are going to win less money. Does this make sense? Entering 1% in here, and blue goes to blue, right? Give me a second. Anyways, blue goes to blue, right? So from here to here to here, all right? So you're going to make less money in terms of pips if you enter here 1%, or if you would enter down here 1%. Can we understand this, everybody? I mean, this is no-brainer, right? Type in the chat, boss, yes, I understand what you're talking about, or type in the chat, no, I have no idea what you're talking about. Can you understand this, everybody? You should risk, it's a non-written rule, but you should risk more in deeper retracements. Today it's Friday, golden nugget for you. Golden nugget for you, golden nugget. The secrets of professional traders. You should risk more in deeper retracement compared to end of extensions. All right, everybody? You should risk more in deeper retracement compared, I'm going to tell you, not a problem, compared to end of extensions. The more you risk on deeper retracements, the more money you are going to make. Does this make sense to you? It's always a guessing game. Yes, it's always a guessing game. But if you can risk more in deeper retracements, Fibonacci wise, market wave wise, then you are going to make more money as the market moves. Does this make sense? All right. Now let's talk about trade management. All right. I'm going to give you mine. Let's go on NZDCAT daily chart. NZDCAT daily chart, and we're going to delete. There you go. All right, delete, and let's go on the daily chart. All right. For you, everybody, just for you, two simple methodologies. All right, two simple methodologies. So trade management, trade management, two simple methodologies. I'm not if it's with the H. Okay. Number one is it's called cancel, and replace the stop. All right. And the next one it's called, you know, trade management with indicators. And here you can get creative as much as you want. Trade management, two simple methodologies. We're going to talk about cancel and replace. All right, so circle, and let's get this circle. And clicking on this one. All right. So here, and we're going to lock and double click. Here the circle, so lock. There you go. All right, everybody. Now let's talk about cancel and replace. Let's say that this is the market wave, extension, retracement, extension, and I'm going to enter this counter trend line break example, and my stop loss goes above this high. Agreed, everybody? There is no right or wrong. You can have, talking about your strategy, you can have trade management rules, or you can have fixed stop and fixed take profit. Boss, do I need to manage my trades necessarily? No, you don't need to. It's not necessarily, not mandatory. But many times, you know, we talk about why would you let a winner turn into a loser? If this makes sense to you. But it's not mandatory. You can have a fixed stop and you can have a fixed take profit. Alright? There is no right or wrong. It's your strategy. So cancel and replace goes like this, everybody. I've entered here with the counter trend line break, and I'm monitoring the market, I'm monitoring the market, I'm monitoring the market. Now, as you can see, the market wave or the short-term trend made a new low, right? The market made a new low. So I'm not going to cancel and replace, not yet. So I need to wait for a new retracement, you know, for a new swing. And then, give me a second, there you go. So now that I have a new swing, retracement and extension, okay, now I'm going to move my stop, okay? I'm going to cancel and replace down to here. On the pattern, yes sir, always on the pattern, okay? I'm not out of the risk, and not yet, I'm not out of the risk, not yet. So I'm monitoring the market, I'm monitoring the market, I'm monitoring the market, I'm monitoring the market, and monitoring the market. And here would be the example, retracement extension, again, you know. Now I'm going to cancel and replace. So every single time that the market confirms a new swing, I can cancel and replace. Alright, now I'm not sure if this was the best example. And let's do like this: higher highs, higher lows, higher highs, higher lows, higher highs, and the market is retracing. Okay, so I've entered here. This is my stop loss down in here. All right, so now I cannot do like this. It would be prematurely, it would be premature. As soon as possible, the market goes my way again and makes a new relevant high, confirms the high. So this is the relevant high, this is the relevant low, this is the relevant high, this is the relevant low. The market confirmed the relevant high. Now I can cancel and replace my stop. I'm not out of the risk yet, okay, so I need to wait for the next one, for the next retracement and extension. Let's say that the market makes the lower low, lower high, lower low, lower high, and then moves up, market wave, higher highs, higher lows, higher highs, higher lows, and confirms the next upswing. This would be the next relevant low, this would be the next relevant high. Now I can cancel and replace my stop, locking in profits. Alright, now it's the time for me to cancel and replace my stop, and now I locked profits. So even if the market crowns or stops me out, I'm going to end up with profits. So if the market makes another one, lower high and higher high again, I'm going to cancel and replace my stop again, locking in profits. And I can do this as far as the market goes. And if I go on NZD weekly chart, so this was back in time, weekly chart, market wave extension, retracement, extension, retracement, extension, retracement, extension, and then another example, extension, retracement, extension, retracement, extension, retracement, extension. All right, every single time that the market made a new low, confirmed a new swing, I could have cancel and replace the stop, locking in profits. All right, here same story, you know, this would be the stop loss, and then the market made a new downswing, cancel and replace, locking in profits, cancel and replace, locking in profits, cancel and replace, locking in profits. Clone chart. Let's go on the 15-minute chart on Euro CHF, everybody. Come on, it's Friday. Come on, Forex, it's Friday, right? It's Friday. All right, 30 minutes. Come on. Come on, Forex, let's work. Okay, all right, very good. What would be the example? 30-minute chart. Let's take this one as a still so we've entered here, just an example. All right, we've entered here, 30-minute chart this time, 30-minute chart from Euro CHF. Okay, if my stop loss is down in here, just an example. All right, and I'm measuring the extension, retracement, extension, retracement, extension, retracement, extension, retracement, extension, retracement. All right, extension, retracement, extension. Can you see everybody on the 50-minute chart too? As the chart progressed, just an example, if you would enter here, 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 every single, depending on your entry of course, but every single time, let's say you don't see the future, right? So you're going to wait for the new swing to confirm, higher high, you're going to wait for a higher low and higher high. All right, so starting from here now you can cancel and replace the stop. You're going to wait for a higher low, higher high, cancel and replace the stop. You're going to wait for higher low, higher high, cancel and replace the stop, locking in profits. You're going to wait for higher high, higher low, higher high. You're going to cancel in place. Okay, you are not, no, there is no right or wrong, but statistically if you cancel and replace on the most recent one, sometimes the market is going to stop you out and continue to go its way. So it's better to be one low behind. Does this make sense? Somebody's asking, oh, why don't we cancel and replace on the most recent low? It's a fair question because sometimes the market is going to, there you go. See? The market would stop you out on cancel and replace you would end out with profit, but then the market would go your way. So if you are one low back, you know, and you're waiting and you see, okay, it's a lower low, but then you are waiting and you see, whoop, it's a higher high, right? Now you can cancel replace on this one. Make sense, everybody? And you're monitoring the market, another higher high, higher low, higher high, higher low, and so on and so on and so on. So this is one technique, it's called cancel and replace. All right. And so we are here. Trade management, how to manage your trades. You know, two simple methodologies: cancel and replacing the stop, locking in profits as the market progresses. The another one is the trade management with indicators. Okay, now there is no right or wrong. There is no right or wrong, and we're going to use the same example. We're going to use NZD on the daily chart, okay, and then we're going to use Euro CHF on the 30-minute chart. All right. The good news is that with trade management, with indicators, you can get creative. There is no right or wrong, okay. So simple indicators, everybody. You can use Heikin Ashi. Let me see, Heikin Ashi. If you are using Heikin Ashi, then you need to change from candles to the line. All right, like this. Now you have Heikin Ashi candles. This would be one. Okay, so you are in and out, in and out, in and out. Now the next one would be, not to get too complicated, would be moving average, moving average. No, exponential average, gamma, no, momentum indicators, no, overlap studies, double exponential moving average. All right, and you are going to have two of them. One is 21, and again, why I can't move? All right, looks like it's bugged. F11, not working. J-Forex. All right, let's go trading view, everybody. And not in here. Yeah, I have something behind, right? And I cannot find the... Yeah, it's so frustrating, right? So frustrating. Not a big deal. Give it a second. Let's go to trading view. Was this a crown, says Sam? Yes, it was. And give it a second, everybody. So it's Friday for the softwares too. So NZD CAD, right? We talked about NZD CAD daily chart. NZD CAD daily chart would be the, and not this one, trading. Right. All right. All right, everybody. So let's go here, right? And here we are going to remove drawings. There you go. Here and the daily. Back to the daily. All right. So we talked about Heikinashi. You have Heikinashi colors and double zigzag, Harlow, super trend, zigzag, super trend, no. And let's go to exponential, moving average exponential once, moving average exponential twice. All right. So one is going to be exponential, one is going to be 21. Let's see if this works. So it's not this number, it's 21. All right, and the next one is going to be 8. 8. Close, it's all right. Not sure about this one. 8. And style and changing colors, maybe like this. All right, and the first one we are going to make it bigger, bolder. There you go. Okay, everybody. How does this work? Trade management, just an example. You can say you are going to short the market in here, just an example. And as you can see, the Heikinashi candles are red, right? And then here the Heikinashi become green. If you want trade management, you can get out 50% of your position, but then when the next Heikinashi candle gets red again, you must re-enter the same 50%. All right? So you are staying in the trade, staying in the trade, you are staying in the trade, you are staying in the trade. Bam, Heikinashi turn green. You get out with profit 50%. Heikinashi turned red again. You must get in with the lots, with the volume that you got out in here. And you are staying in the trade, staying in the trade, making money, staying in the trade, staying in the trade, staying in the trade. Green, bam, you get out again, 50% of the position. You are staying out, 50% of the position, bam, went red again, you must re-enter. You are staying in the trade, making money, bam again, green, you get out 50% of your position. And second one, you are staying out 50%, you are staying out, you are staying out, you get in again with the 50% that you got out. This is trade management. You are staying in, making money, you are just following the market. All right, green, you're getting out 50%. And here where the moving average exponential 21 crosses the 8, you get out the second 50%, totaling 100%. You are out. Can you do this, everybody? Or is this too difficult, too complex? This is just an example. Yeah, Forex doesn't work. I'm not sure why, you know, it's... But okay, we have TradingView too, so it's not a problem. Alright, everybody? Boss, why would you do this? If you don't get out, remember, you made money from... You made money from here to here. Okay? And you made even more money because you are in and out with 50%. Every single time that Heikin-Ashi turned green, you closed in profit 50% and you re-entered. You closed in profit with 50% and you re-entered. You closed with profit 50%, alright? Now, if you don't get out in here, just an example, what is going to happen with your profits? See, everybody, how easy it is for the market to eat? Look at this retracement. If you would not, this is not mandatory, alright? But it's a pity. Why would you let the market to eat all of your profits? Boss, can I use different indicators? Sure. You can use any indicators you want. What about ATR times 2 as a stop loss? There is no right or wrong, Sam. You can use anything you want. Everybody, you can get creative as much as you want. You can use ATR times 2, you can use Heikin-Ashi smooth, you can use whatever you like. Make sense, everybody? You can use moving average exponential. Make sense? Lastly, before we finish for today, you can split. If 50% and 50% doesn't satisfy you, you can split into 3. So you go to Heikin-Ashi smooth. Hopefully it's this one. Alright, there you go. See, everybody, this one? So instead of you getting in and out 50% and 50%, you can add a third indicator and you are going to get out. So if this would be the example, you are going to get out with the Heikin-Ashi here 30% and you're going to get in 30%. Alright? And you are going to get out 100% in here. So Heikin-Ashi turned green, you get out 30%. The moving average exponential 8 and 21 crossed on the upside, you get out another 30%. And when the Heikin-Ashi smooth turned from orange to blue, just an example, you get out another 30%. How to get out first 50% in Dukascopy? Sam, don't trade on Dukascopy, it's too expensive. Everybody, you Dukascopy, it's very good and everything, but you must have minimum 10,000 euros or $10,000. Otherwise, Dukascopy, it's expensive, alright? The costs and the margins and the commissions. Alright? You have better platforms, better business models. better asset managers. Okay? If you have big bucks, big pockets, be on Dukascopy. It's perfect. No big deal, no problem. But if you are not that rich and you have just a few thousand euros, maybe whatever, then I would suggest you to go try, different models, different businesses. Sam, I'm going to tell you everything when we start the Forex course 202, right? And everybody, this is an educational stream. Don't you dare play with real money until you can prove to yourself at least 3 months of consecutive profits. If you are willing to listen to me, Dukascopy or not, don't you dare placing real money, fooling around, unless you have had a minimum 3 months of consecutive profits and a strategy that you can explain to me. Otherwise, you are going to lose. I promise you, you are going to lose. Okay? There are, and all right, let me close this one. So gerenciador de tarefas, let's see where is Forex and finalize. All right, everybody, this business has some rules. And if you don't learn the rules of the game, the market and this business is stacked against you, alright? You need to learn the rules of the game. Otherwise, the rules and the market and the business is stacked against you. Okay? Oh, I have 300 bucks I'm going to throw and I'm going to play and whatever. Well, invite your significant other out to dinner, or whatever. Everybody, the minimum viable money in the Forex market for you to make it's 10,000 US dollars or equivalent in euros. Otherwise, you are going to lose. It's just oh, I have a friend who put 1,000, he's going to lose. It's just a matter of time. Maybe he's not going to lose in 1 week, but in 1 year and a half, 2 years, he's going to lose the thousands. Alright? There are some unwritten rules you need to learn. Alright everybody, our time is up. See you back on Monday. Have a great weekend. This is the boss signing off. Thank you again. See you back on Monday. Have a great weekend everybody. Try to learn the rules and decide on the trade management. Alright? Decide on trade management everybody. What do you prefer? What indicators? Or do you prefer maybe the cancel and replace? Alright, see you back on Monday. This is the boss.